Welcome back to the Digital Asset Report. Bitcoin is trading just under $70,000 and Ether is around $2,130 after another volatile week. Digital asset investment products pulled in $1.06 billion last week, a third straight week of inflows. Bitcoin products took in $793 million and Ethereum added $315 million. Even as geopolitical stress kept pressure on broader risk markets. The Federal Reserve met this week deciding to hold interest rates steady despite President Trump's clear desire to see them lower. Recent oil prices have some sounding the alarm that inflation may return if these price levels maintain due to the downstream impacts of higher energy prices. Today's lead story involves SEC Chair Paul Atkins. On March 17th, the SEC released long-awaited crypto guidance that tries to draw clearer lines around the market. The agency split digital assets into 5 buckets: digital commodities, digital collectibles, digital tools, stablecoins, and digital securities. Chair Atkins stated that federal securities laws apply only to digital securities. The SEC also warned that a token that does not start as a security can still become one if it's sold with a profit expectation tied to managerial efforts. This is a meaningful attempt to define the lanes after years of uncertainty. Take a listen.
So today, I'm pleased to announce that the SEC's persistent failure to provide clarity on this question is over. As we speak, the Commission is implementing a token taxonomy and investment contract interpretation, and you should find that in your inbox or if you look on the website when you get home. Our interpretation, which is grounded in existing law and informed by extensive public input, establishes 4 asset categories that are not deemed to be securities. So digital commodities, digital collectibles, digital tools, and payment stablecoins under the Genius Act. With these categories in place, the interpretation then clarifies that only one crypto asset class remains subject to securities laws, namely digital securities, which are traditional securities that are tokenized. This distinction returns the SEC to its core mission and statutory authority of protecting investors involved in securities transactions. We're not the Securities and Everything Commission anymore. So, thank you.
Atkins also said the SEC should consider a safe harbor and a startup exemption for crypto issuers. This suggests the agency is trying to create a workable path for projects to launch inside the U.S. without spending years guessing where the line is.
The Commission came out for the first time with an interpretative release that really sets a line between what are commodities in the digital asset space and what are securities. And the significance also about this particular release that we did is that the CFTC participated with us in it. And so they had some guidance that's included in that release along with our interpretation. So basically, as you said, and that tripped off your tongue very well, so that's very good, we are outlining 4 types of assets that are not securities, and those are digital commodities, digital tools, digital collectibles, and stable coins. And stable coins per the Genius Act that was enacted last year. We're breaking with the past. We are now giving clarity from the SEC's perspective as to what are and are not securities.
That new guidance immediately sets the stage for another story. On March 18th, the SEC approved Nasdaq's proposal to let certain stocks and exchange-traded products trade and settle in tokenized form. The securities can still trade as traditional shares, but they can also exist as blockchain-based digital tokens settled through the depository trust company. Nasdaq said the first group would be limited to Russell 1000 stocks and major benchmark ETFs, including products tied to the S&P 500 and Nasdaq 100. Meanwhile, Mastercard made one of the clearest institutional bets on stablecoin rails we have seen this year. The company agreed to buy BVNK for up to $1.8 billion, including $300 million in contingent payments. BVNK provides infrastructure that bridges fiat and stablecoins across major blockchain networks in more than 130 countries. Mastercard said the deal will support cross-border remittances, business payments, and payouts using stablecoins. Elsewhere, crypto firms are still pushing deeper into public markets. Abra said on March 16th that it plans to go public through a blank check tech merger that values the company at $750 million before the deal. And a day later, GSR announced its acquisition of digital asset advisory firms Autonomous and Architect for $57 million to build a crypto-native investment banking platform focused on fundraising, governance, and treasury strategy. Adding to the tokenization momentum, S&P Dow Jones indices gave crypto platform Trade XYZ the green light to launch a perpetual contract tracking the S&P 500 on Hyperliquid, a decentralized derivatives exchange. The contract gives non-US investors leveraged exposure to the index around the clock, including weekends when Wall Street is closed but geopolitical headlines keep moving markets. It's another sign that the race to bring real-world assets on-chain is becoming very real. But the market is also showing some friction. Kraken has paused its multi-billion-dollar IPO plans, citing weakened market conditions. The crypto exchange had filed for a public listing in November of 2025. Citigroup cut its 12-month Bitcoin target to 112,000, down from 143, and lowered its Ethereum target to 3,175, down from 4,304. Citigroup stated that stalled U.S. legislation is nearing the window for regulatory catalysts that could drive broader institutional adoption. This year to date, BitGo is the only public digital asset firm to go public. The bigger picture this week is clear. Paul Atkins and the SEC set the tone by defining digital asset categories. Nasdaq moved tokenized securities closer to the core of the US markets. Mastercard bought stablecoin plumbing, and crypto firms are continuing to build toward public capital markets. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more just like it.